index itself is flat as flat can be, 10,740, 743. So about 6 points higher.
It's turning out to be a day where there is an absolute consolidation for the Nifty and the Sensex, with just about a little bit of an outperformance coming in for the mid-cap index.
The market's up 0.5% nearly, almost to the day's high, 10,784.
Decent move for the market, especially in the mid-caps where there's been a decent rally. In fact, the index up about 1%.
Very diverse, across the board move, you'd have to say. So you can't call this a narrow move. That's not a complaint for sure. In fact, we're almost back towards that 10,800 mark as we're closing out.
Short covering rally continues on Dalal Street. Sensex and Nifty add around 0.5% each. Pulled up by metals and financials. Mid-cap ends more than 1% higher. Tech Mahindra's buyback also brings cheer to the market.
PSU banks gain after the announcement of government's capital infusion plan. Corporation Bank and Allahabad Bank are the likely candidates to exit the prompt corrective action list. Both surge in trade.
Crude prices inch up amid OPEC cuts, casting a shadow on oil sensitives. BPCL loses 2%. Aviation stocks like Interglobe and SpiceJet end in the red. Kansai Nerolac also suffers in trade.
Reliance ADAG Group shares rise after Reliance Capital invites a current partner, Nippon, to acquire additional 43% stake in the asset management company.
And financials have a good run in trade. NBFCs like M&M Financial, L&T Finance and Muthoot all end the day sharply higher in the green. Housing finance stocks also rise on rumours of relaxation in affordable housing rules. Well, those were the top 5 headlines from Dalal Street. Hello and welcome to Markets Today. Talkback, the show where we tell you everything that happened in those 6 hours of trading in just 5 headlines. And today, it was a day when no matter at what point in time you bought the Nifty, you made money. It was a nicely upward sloping graph. I'm Lata Venkatesh with my colleague Prashant Nair. Hi, Prashant.
Hi, Lata. And, the continuation sort of is there from yesterday. 57, 58 points higher. The broader market is doing well. Market breadth is okay. I think, for another day, bulls can say hurrah. Over the next 30 minutes, we will talk about the top 5 stories. We'll get questions going, and our guests will take those questions as always. Mitesh Thakkar is with us, and Mayuresh Joshi is with us as well. Gentlemen, thanks very much. Good to have you here. But let's as always, take a look at what really happened in the day, starting right at the open, the big factors, cues, and how the market fared. Lata.
Well, just as you said in the headlines, the bulls carried the day for the second day, a sharp short covering rally. And this triumph is important because it came despite negative global cues. At least half of Asia was in the red and much of Europe remained in the red. So crude prices have inched up. So things were against us as far as global cues were concerned. Nevertheless, this very sharp short covering rally that started yesterday continued unabated. The mid caps once again were, the big boost, were the big leaders of the rally. We saw yesterday a mid-cap outperformance that continued today, ending months of underperformance by this index. Month to date, actually, they seem to have been outperforming. The broad list of stocks were PSU banks, NBFCs, and the ADA group of stocks. While it's good that the broader markets are finally beginning to see a bottom at least, today the quality of the stocks that led the rally may want to make you ponder a bit and not dive in just yet, because just about everything was moving higher today. So buyer beware. Anything you want to add in terms of the names of stocks?
A fair bit, Lata. So, the broader market, as I began by saying, had a fair bit to show. The Nifty was up 0.5%, but the mid-cap and small-cap indices were up 1% plus, 1.5% actually on the small-cap index. Sectoral movers, pharmaceuticals, metals and media were doing very well. The top gainers there, actually on the losing side, there was only IT, which was around about 0.2% or so. Nifty movers, some up, some down. Indiabulls Housing stood out. Gainer, Bajaj Finserv, Tata Motors, all about 3%. Indiabulls Housing, of course, 6%, the other two around 3%. Bharti Infratel, BPCL and Yes Bank were the losers. And they're on your screen. Those are the top losers. Broader market gains, financials, lots of them, including PSU, NBFC, everything. Reliance Capitals, DHFL, Just Dial, Canfin Homes, Allahabad Bank, Corporation Bank, Dish TV, BF Utilities, Indiabulls Venture, So, I mean, a fair bit of mix, but I think generally speaking, you had a fair bit of financials which did well. Broader market losses, not very many on huge volumes, but a few. Indigo was down a bit, Nalco lost a bit, and there was something like an Oil India which was down about 4.33% on large volumes. Lata.
Stocks which fell either use crude or use leverage. That was the nature. Well, today actually many of them rose, the leverage stocks. Let's find out what our guests are making of the market after 2 days of rally. Well, first up, let me come to you, Mitesh. Now that the rally seems to have built quite a base with many stocks helping out, is it safe to go long even at these levels?
I think when the rally started, in fact, a day before that, we kind of indicated cutting of short positions because we were extremely oversold. But my initial belief was that around 10,780, 800, we'll find strong supply and possibly that will be a time to short again. We've reached there, but as of now, the rally doesn't look like sign of waning. The hourly indicators or the 2 hourly indicators which had such good strength continue to show upward bias. So my sense that we will see some extension of this rally. In that sense, I think going long would be a good idea, but maybe after 2 days of up move, you would want that 20-30 point dip to come in. So around 10,770, 760, I would be comfortable buying with a stop at 10,740, and the revised targets would be around 10,850, 860 zone, which is also the 200-day moving average.
Okay, Mitesh, thanks very much for that. Let's move on to the second story. IT major tech Mahindra has approved its first ever share buyback. The company's board plans to repurchase just over 2 crore shares at a price of 950 rupees per share. This implies a premium of 14% to the current market price. The 1,950 crore rupee buyback is set to happen on the 6th of March via the tender route. Let's quickly listen into the CFO of the company who we spoke with earlier in the day, Manoj Bhatt at Tech Mahindra. Listen in.
I think from a perspective of it's a more efficient way to return capital to shareholders, and this is something we would consider on an annual basis. So, as you know, the buyback obviously is tax efficient for the company.
Okay, with that we come to the second headline from the markets today. Public sector banks surged after announcement of capital infusion by the government. Corporation Bank and Allahabad Bank are the two banks that are likely to exit the Reserve Bank's very strict prompt corrective action regimen because of this additional capital. Remember, the government had announced yesterday a 48,000 crore rupee recapitalization plan for 12 banks, and Corporation and Allahabad are among the banks that are receiving maximum amount of money. Abhishek is here with the details.
Capital infusion in PSU banks have been done keeping in mind the prompt corrective action of RBI. So government is being, proactive in terms of either removing banks from PCA framework or preventing them from falling under PCA framework. So who will come out of the PCA framework is Corporation Bank, which has been allocated nearly 9,100 crore of capital, and Allahabad Bank, which has seen a capital flow of nearly 6,900 crores. Now, to keep a few banks out of PCA framework, Andhra Bank has been allotted close to 3,260 crore of capital, while Syndicate Bank has been given 1,600 crore of capital in order to prevent it from going under PCA. However, the government has also capitalized few PSU banks but cannot prevent them going under PCA. One is PNB, which has been allocated 5,900 crores. Another is Union Bank, which has been allocated more than 4,100 crore. So both these banks may need additional capital in the form of non-core asset sale that they can get in order to prevent or bring down their NPA, net NPA ratio to below 6% ratio. Despite capitalization, few banks will remain under the PCA framework. Central Bank of India, Indian Overseas Bank, UCO Bank and United Bank of India. Couple of banks which are already out of PCA have also seen capital flow. So one is Bank of India, which has got a capital of more than 4,600 crores, and the least capital was given to Bank of Maharashtra at a mere 205 crores. Back to you.
Okay, thanks a lot for all that info, Abhishek. But Prashant, in spite of some of them not being anywhere near coming out of PCA, you saw them rise about 7.5%, 8%. UCO Bank, for instance, up 7.5%. United up 7.5%. IOB up 7.5%. Central Bank. These are not anywhere near that 6% net NPA. But nevertheless, today was Diwali for everybody.
PSU banks for you. I mean, when they rise, and when they fall, the fall is equally vicious. We got a question. Jayesh P. Rao from Ahmedabad has got a question on State Bank of India. He wants to know the right time to buy 1,000 shares in the company from a medium-term perspective. Mitesh, SBI, what would be the right time? Entry point?
State Bank of India, in fact, fortunately, is in a very clearly defined range. If you look at the chart for about a year and a half, I think it's doing 240 on the downside, about 320, 315 on the upside, and I would still suggest anything close to about 250, 240 zone is the entry point, and you should keep a 20-point stop from there. I think lesser chances of stock getting hit, but more chances of stock eventually heading towards the upper end of the range around 320, which would be your exit. In case we have a breakout above that, we can look at fresh targets, but right now there's no indication of that.
Mayuresh combo makes us confuse names. I think the intention was to ask Mayuresh, what did you make of SBI? 1,000 shares, right time, Mayuresh, and right stock?
Evening, Lata. I think our bias still remains with the private space, but within the PSU universe, I think State Bank probably still stands out. The investor can probably look at a staggered way of probably getting into the stock over the next few weeks, and all the key competitive parameters probably stay with the bank. So when you're looking at the CASA ratio compared to the other PSU banks, when you talk about the PCR that the bank is doing, when you're probably talking about the risk-weighted assets as a percentage of the overall book that they probably have, and overall I think the asset quality pressures, including the watch list, are coming off. So yes, I think a staggered way over the next few weeks is how I see it. The only bank that we probably like within the PSU universe.
Okay, fair point. Third headline?
Okay, the third story then. Oil prices inched up, crude oil prices that is inched up amid doubts, I mean essentially some OPEC casting some sort of doubts on oil sensitives. I mean, BPCL lost about 2%. Aviation stocks like Interglobe Aviation and SpiceJet both ended in the red. Kansai Nerolac also suffered in trade. We've got a question coming in. Santosh Ghosalkar from Pune has written in with a query on SpiceJet. He's been holding 165 shares of SpiceJet at 98 rupees a share. He's a long-term investor and wants to know if he should hold or sell. Mayuresh, again to you, SpiceJet, what would you tell him?
No, so if you look at the qualitative aspect in terms of reported numbers, the cost per available seat kilometer excluding fuel, I think that was at managerial levels. When you probably look about the yields aspect as well, the yields did hold up as well. But movement of crude and what happens with the rupee depreciation against dollar determines the earnings sensitivity. The second element obviously is the overall trajectory of crude at this point of time, and as it is moving higher, I think there is some amount of a rub-off effect that you probably see. Fares have got increased, but there is competition intensity as well. So unless the investor has a fairly longish time horizon, and if Mitesh does like the stock, he can probably average that, but we still like probably say gold finance companies on declines, which in my opinion can do.
Okay. Well, the other question is on the other crude sensitive paint stocks. There is one Abhirup Das who has tweeted to us a question on Kansai Nerolac. He says he has been holding 100 shares of the company, purchased at 240 rupees a piece, and he wants to know what he should do, whether he should hold or sell. Mitesh, you want to comment on this one? Kansai Nerolac, purchased at 240 rupees.
The stock price is turning down, and I think good time to take profit. It may not decline a lot, but I think the uptrend seems to have ended, and I think 380 on the downside, which the stock had tested in October 18 also, could be revisited, and I think the stock will just do a range of about 380 to roughly about 470, 490 on the outside. So my sense is I think good time to exit. If it breaks 380, we can look at further correction, and that possibility is there. Therefore, I would be more biased towards exiting.
Okay. Well, thank you very much, gentlemen, but do stay on. We have to take a break. We leave you with some ideas, investment ideas we got from Gautam Dugad of Motilal Oswal, his views on the banking and the IT space. Listen, we are back in a jiffy.
A lot of issues seems to be behind for them. One of the biggest concerns is divergence, and given that it was nil, so large part of the overhang is behind. So the capital infusion obviously comes as a shot in the arm. However, what I would rather do on PSU banks is still stay with SBI. I think IT remains a very important part of our model portfolio, and I'm positive on IT. Particularly in this situation where there are a lot of headwinds around the market, again getting into a big event around which there is some uncertainty. After 7-8% correction in TCS, I do agree that even it is looking quite attractive. I will be a buyer in that space. in Page particularly so, because it is part of an industry which is growing at 15-16%. And Page's own track record over the last 10 years has been very phenomenal. The entire specialty retail space is looking very attractive to me. We like Titan. That's been one of our top ideas for the last 3 years. We continue to like that. Great market share gains happening there. Among some of the retail companies which we don't cover, we like V-Mart, we like ABFRL, which has been doing well. Even Trent has had very strong run in terms of profitability over the last 2-3 years. So we are positive on that space.
The ADAG stocks got a boost in trade after Reliance Capital invited Nippon Life Insurance to acquire its stake in its mutual fund business. Both Nippon and Reliance Capital each own 43% stake in Reliance Nippon Life. However, 23% of Reliance Capital's stake is actually pledged. Reliance Nippon Asset Management surged 20%, while Reliance Capital gained 11%. Now, I've got a question.
Okay. Yeah, generally the ADA group stocks did very well today. Zahir Khan from Mumbai has written with a question on one of these stocks. That's Reliance Infra. He says he's been holding the shares at 802 rupees. Really? And he's been holding it for 4 years. Okay, sitting on some losses. Wants to know if he should still hold. It's a cruel cut to take, but what should he do, Mayuresh?
No, it is a cruel cut, as you rightly pointed out, Lata, but I think staying with quality is a paramount importance markets like this. So I think it's better off that he probably stays with the private banks. We do like Federal Bank from a long-term perspective. We also like ICICI Bank from a long-term perspective, and even the gold finance companies. So I think probably diversify across these stocks to probably have a better return on investment.
Okay. Is there any stock from the ADAG pack that you would play, Mitesh, long or short?
See, I think from trading point of view, yes, Lata. I think for the timing, I think both Capital and Reliance Infra does look like they've been extremely oversold, made a short-term low. But if you ask me if you can look at the long-term charts and take an investment call, I think I clearly avoid it.
Okay, fair enough. So we move on to the fifth story then of the day. Financials had a good run in trade. NBFCs like Mahindra and Mahindra Financial, L&T Finance, Muthoot Finance all ended the day in the green. Housing finance stocks were also a buzz on rumours of relaxation in affordable housing rules. Indiabulls Housing Finance, PNB Housing Finance, Canfin Homes all did very well with very strong gains on your screen.
Okay, questions now. Atharva Bhosle has written with a question on Indiabulls Housing Finance. He's been holding 675 shares of the company purchased at 770 rupees. Says he's a long-term investor, wants to know if he should hold or sell. That's Indiabulls Housing Finance. First to you, Mayuresh, what should he do?
No, so if he has a long-term horizon, obviously the pain that NBFCs have felt, both in terms of the liquidity concerns and the cost of borrowing moving higher, at the same time, I think disbursements not up to the mark. Clearly affected, but I think Indiabulls posted a reasonable set of numbers. Now, what probably comes out over the next few quarters as rates have normalized and the expectations of disbursements improving gradually over the next few months, that does provide respite for a few of these housing finance companies. So if he has a long-term view, yes, he can probably hold on. The other stock that we probably hold and like is LIC Housing Finance, where the NIMs have got protected. There's a majority part of a retail advance growth that probably happens. Retail is still around 90-92 odd %, and though the developer portion has gone up, asset quality pressures have emerged a tad bit. I think that could get contained, and again the parentage and the expectations of NIMs holding up should support earnings growth.
Okay, that's actually a buy or at least a hold. What's your sense for the same stock, Mitesh?
Yeah, I would also suggest a hold. I think the stock has completed a medium to long term correction, and now I think it's at least heading towards 540, 550 zone if you give it about 2-3 quarters of time. So in that sense, I would recommend a hold over here.
Okay. We got another question coming in from Ramesh RJ, who's tweeted to us. He wants to know about L&T Finance. He's been holding 200 shares of the company. His cost is 180 rupees. He wants a short-term outlook on the stock. So this goes to Mayuresh. Mayuresh, L&T Finance?
So Prashant, again, I think a large element in terms of the asset liability mismatch problems that were witnessed by a whole host of NBFCs, L&T Finance also probably fell prey to the whole scenario. But the other element in terms of how the book is standing out at this point of time, the securitization impact, that will also aid the overall accretion to the book value and the overall impact also of advances growth, as I said earlier, for the NBFC universe picking up slowly and steadily, along with improvement in NIMs and asset quality pressures ebbing off. I think it does make sense for the investor to probably hold on to a stock like L&T with a very strong parentage as well.
Okay. You want to take a jab at L&T Finance, Mitesh, as well, if you can tell us what is your pick of the pack among NBFCs generally?
So I think, Lata, L&T, I see, my idea for NBFCs would be to trade possibly right now. I don't think we are looking at a big secular uptrend. The charts are as strong as they were about a year and a half back. But L&T Finance, I think these are good levels to average and possibly get its cost down. One, I think the stock on the short-term charts is definitely looking positive. I think a trading rally to 140 can happen. But also I think the longer-term supports are close to about 110, 115, and I think we are at about 125, 127 right now. So I think good levels to possibly average them out and get your cost down. And I think once the stock on medium-term basis gives a reversal, 170, 180 should be your next target, which will at least give you a profitable exit.
Okay. Gentlemen, thank you very much for taking questions from our viewers and answering them.
From all of us here, from Lata, me, everyone on the team, thank you very much for staying with us. More coming up on the other side.